Hey guys, welcome to Lean to Knowledge, the best place for entertainment and learning on anything about finance, education, and the world. We bring you something spectacular every video, and we hope you're on board for an amazing journey with us. Investing early is one of the best solutions if you want to have a comfortable retirement, no matter how far off it seems, while you're still in your 20s or 30s. It goes without saying that you need a lot of money to live a comfortable life. And for the working class in particular, investing their money is one of the finest methods to achieve this. You see, if you start investing early, you will be much wealthy. Here's a fantastic illustration. Assume you start investing $500 each month and achieve an 8% investment return. If you begin at age 25 and stick with it until you're 60, you will have $2.16 million in retirement savings. However, you would only have $341,000 if you started investing at age 40 rather than 25. Of course, this straightforward illustration is nothing new, and it depends on an investment generating an annual compounding rate of 8% without taking inflation into account. However, as I've already stated, this is nothing new, and I'm sure you heard it before. Still, for the vast majority of individuals, this continues to be the best strategy to increase wealth and make sure you have a sizable reserve to use through hard times. In other words, you set yourself up for success by getting started early. We'll be looking at some of the most significant investments and assets you can make while you're young in today's video. The investments I'll be discussing in this video are displayed on the screen in no particular order of importance. Therefore, let's begin with the first one. Number 1. Real estate. With real estate, you almost never make a mistake. One of the best investments is real estate for a variety of reasons. First off, there's typically a housing shortage, and real estate assets nearly always increase in value. Owning a home is the first step in real estate investing. Your costs, such as rent, go down when you own a home. After winning your own home, you can consider developing other commercial properties. These could be apartment buildings, townhomes, commercial buildings, and other real estate. There are other choices too, if you're unable to invest directly in the real estate market. There are a number of crowdfunding websites where you can put as little as $500 into an investment. The money would subsequently be invested in real estate holdings along with the contributions of other investors. REITs are the name for these assets, real estate investment trusts. Number 2. Treasury bills. For every investor, regardless of age, treasury bills are an essential investment. There is no better time when you're young to invest regularly in treasury bills. Short-term government-guaranteed debt instruments called treasury bills are used for fund spending and manage the money supply. 3 tenors, 90 days, 182 days, and 364 days are available for treasury bills. Whether it's tuition, rent, or even professional tests, everyone has expenses to cover. The cash you have on hand can be conveniently invested in treasury bills and cashed out when the bills are due. This is an example of the financial concept known as asset and liability matching, which entails buying an asset to help pay for a future liability. Treasury notes are completely risk-free, so unlike other investing options, your earnings are assured. Additionally, they offer respectable profits, so why not invest in them? Number 3. Education. According to statistics, studying is the most effective in your 20s. Your 20s and early 30s are the best years for learning new things, according to study. Consequently, it might be the ideal time to earn that additional degree. Education is crucial because it may position you for success in the workplace. You must realize, though, that not all education and learning are advantageous. Be cautious as you go because some learning can be classified as a hobby and is probably not monetizable. Start by looking for successful employment in your preferred fields if you wish to invest in your schooling. Additionally, it might be the ideal time to raise your level of financial literacy. Number 4. Index funds. One of the best investments you can make before the age of 40 is stocks. Despite the potentially very high risk, they offer some of the largest rewards. You have plenty of time to make and learn from mistakes when you begin your financial path. But you should always make wise, considered decisions. Based on the S&P 500 index as the benchmark, stocks have an average return rate of 10%. In actuality, hardly many investments will offer a return rate this high. Bonds may be a good addition when you assemble an index fund strategy. Bonds are the safest investment even if they offer the lowest return rate. Make sure your portfolio contains between 10 and 20% of weighted bonds. Your investment is more secure as a result. You might also provide for the percentage and change it in accordance with your level of risk tolerance. Index funds for cryptocurrencies were just introduced. They appear to be pretty promising even if they have not yet undergone thorough testing. The present return rates, which are between 10 and 15%, are very high. However, the danger rises as the return rate does. The fact that index funds charge less in fees is a huge benefit. The rewards increase as the fees decrease. Beyond diversification, index funds also offer the benefit of many having minimal fees. Investment costs should be avoided as much as possible because they will soon lower your returns. Make sure you consider the tax implications if you purchase the index funds. Number 5. Startup business. Spend your youth on a startup business investment. Why? The benefits of owning a business are endless. You'll be able to make as much money as you can with an endless ROI. A startup firm is another investment you ought to make in your 20s. The potential for massive ROI is astounding. Even if it isn't the next Amazon, making an investment in a young company can have amazing results. You don't necessarily have to launch the company yourself. You can make investments in others' companies in return for shares in such companies. For instance, if you know the entrepreneur, being an angel investor is a fantastic alternative. Your investment may take the form of a convertible note, which implies that if a certain condition is satisfied, it may become a loan. The alternative is via crowdfunding. Numerous crowdfunding platforms, including amazing firms with great potential. Make sure to research extensively about the founder and comprehend the background of the business before making an investment. Choose businesses with compelling narratives and owners who have some level of business-related skills, experience, or education. The alternative involves collaborating with a venture capital fund. You can start by becoming an accredited investor and work your way up to venture capital. These funds, however, have strict requirements and a minimal investment requirement. Number 6. Growth stocks and dividend stocks. We've made it quite obvious that taking risk when you're in your 20s and 30s is advantageous because you still have time to recover if you lose your money at this point. Therefore, investing in stocks provides a great way to invest some of your money in a high-risk, high-reward business. Growth stocks are simply securities with projected annual growth rates that are substantially higher than the industry average. In comparison to their peers, these stocks produce more stable positive cash flows and revenues. Contrarily, dividend stocks are often those of mature, financially sound businesses. Thus, their share prices are less erratic than those of growth stocks. You should start including dividend equities in your portfolio as soon as possible. If the businesses continue to perform effectively, they offer chances to make a stable income over an extended period of time. Number 7. Annuities. In a contract known as an annuity, you and an insurance provider agree that the latter will give you regular payments, either now or in the future. Either a single payment or a series of payments known as premiums are used to purchase an annuity. Retirement savings opportunities are offered by some annuity contracts. Your investments could be used by others to generate a retirement income stream. Others still practice both. You have a deferred annuity if you use an annuity as a savings vehicle, and the insurance company postpones your payout to the future. On the other hand, you have an instant annuity if you use the annuity to establish a source of retirement income and your payments begin right away. Fixed and variable annuities are the two most popular types. A hybrid product called an index annuity, sometimes known as an equity index annuity or a fixed index annuity, is also available. Understanding annuities is important since they are frequently items that investors think about when they prepare for retirement. Additionally, they are frequently promoted as tax-deferred savings products. Annuities do, however, have a number of costs and fees, including administrative, mortality, and expense risk fees. Additionally, commissions on annuities can be very costly, up to 7%. Number 8. Exchange-traded funds. Let's now take a closer look at ETFs, which are remarkably comparable to the index funds we previously discussed. ETFs resemble index funds since they are a collection of securities that include a variety of assets, including stocks, bonds, and gold. They trade similarly to stocks, allowing shareholders to purchase and sell shares on the market. Because of their adaptability, they're useful tools for investing in both broad market indices like the S&P 500, as well as in industries like technology or health, and even in sub-industries like social media or robotics. The Schwab US Large Cap ETF, Global X Robotics and Artificial Intelligence ETF, and iShares Global Clean Energy ETF are a few instances of ETFs. Number 9. Cryptocurrencies and initial coin offerings. Only recently have traditional Main Street investors begun to show interest in cryptocurrencies and initial coin offerings. With over 1,000 different cryptocurrencies currently accessible and billions of dollars invested in ICO financings, these quickly evolving marketplaces are alluring for investors. Most ordinary investors find it challenging to understand these complicated investment products and assess their risk levels. We do, however, know that they have extraordinarily high returns. The potential rewards are between 12% and 200%. ICOs have sometimes done incredibly well. For instance, the OTA had 13,000 times return on investment. In other words, if you had invested $1 when it was given, you would have made $13,000. Number 10. Commodities in economics. A commodity is an economic good, typically a resource with full or significant fungibility, which means that the market treats instances of the good as similar or nearly equivalent without regard to who produced them. You can invest in this in a variety of ways. The first is to invest in various quantities of physical raw materials like bullion made of precious metals. Additionally, investors can make investments via futures contracts or exchange-traded products or ETPs that closely track a particular commodity index. These complex and extremely volatile investments are often only advised for experienced investors. Mutual funds that invest in companies involved in the commodity industry are another option to expose oneself to commodities. For instance, an oil and gas fund might hold equities for businesses engaged in energy exploration, refining, distribution, and storage. Commodity investing has benefits such as portfolio diversification, possible returns, and an inflation hedge. Commodities have also performed the best during periods of inflation, making them one of the finest assets to possess. That's all for now. We hope you enjoyed yourselves and learned something new. If you did, don't forget to hit the like and subscribe button so you don't miss any of our videos. See you guys in the next video. Stay special.